Hi everyone, this is Victor here. As you may already know, PayPal stock dropped as much as 24% right after its Q4 earnings release. There are many reasons for this large drop. For example, PayPal had a huge active users growth miss that did not meet analyst estimates. PayPal's management gave very weak guidance for the next quarter and weak guidance for the entire 2022. PayPal's management suddenly changed its strategy from investing more in incentives that will attract more new users to investing more in campaigns that will increase existing users' engagement. Also, the US inflation rate is at a 40-year high. US Fed is expected to increase its interest rate at least 3 times in 2022 to fight the high inflation rate in the US. All these factors have caused PayPal stock to drop as much as 63% from the most recent peak. You may wonder, is PayPal stock a value trap, or is PayPal a deep value stock that will eventually recover? I will answer these two questions by covering these topics in this video. First, the 4 biggest headwinds PayPal is facing right now. I will talk about each headwind in detail. Second, is PayPal stock a value trap? Third, PayPal stock valuation. And fourth, will I buy more PayPal stock? If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and investing videos every week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become a premium member. Our goal is to create the best intelligent investor community that will help all our members grow their stock portfolios to over 7 figures over time. With your support, we'll be able to stay independent, hire other outstanding analysts to cover different stocks, and create many excellent stock analysis and investing videos every week that will help you become a great investor. The link is in the video description. Take a look, let's start. The biggest headwind is this: PayPal's active user growth and revenue growth have slowed down a lot in recent quarters. PayPal stock dropped 24% right after its Q4 earnings release because PayPal's active user growth did not meet analyst expectations. More importantly, PayPal's management gave very weak user growth guidance and revenue guidance for the next quarter and for the entire year 2022. For example, in the most recent Q4, you can see PayPal only added 9.8 million net new active accounts, including 3.2 million from the acquisition of Payday. In comparison, PayPal added 16 million net new active accounts in the same quarter of last year. PayPal currently has 426 million active accounts at the time of making this video. If you look at this here, you can see PayPal's net new active accounts growth have slowed down a lot in the most recent quarters. PayPal's management gave very weak guidance for the next quarter and for the full year of 2022. For example, management expects that the company will add 15 to 20 million net new active accounts in 2022. In comparison, PayPal added 48.9 million net new active accounts in 2021. Management expects that PayPal's full-year revenue will grow between 15% to 17% in 2022, including the impact from eBay. Again, this is lower than analysts' expectations. For example, analysts had expected year-over-year revenue growth for 2022 to be 17.9%. Total payment volume (TPV) is another important metric that drives PayPal's revenue growth. If you look at this here, you can see PayPal's total payment volume has slowed down a lot in the recent quarters. PayPal's quarterly revenue growth has also slowed down a lot in recent quarters. There are several reasons for this slowing growth. The first reason is that PayPal's user growth, total payment volume growth, and revenue growth have benefited a lot from the pandemic in 2020 and throughout the first half of 2021. PayPal added 120 million new customers during the pandemic, which is much more than before. This is what we call the pull forward effect. Customers use PayPal to shop online much more than before since they could not go to stores to shop. Now customers can shop in stores again. This is why PayPal's total payment volume and revenue growth have slowed down a lot in recent quarters. The second reason is that PayPal benefited from government stimulus and eBay's revenue contribution in the first half of 2021. But now there's no more government stimulus, and eBay's revenue growth contribution is much smaller than before. This is why PayPal's revenue growth has slowed down a lot in recent quarters. The third reason is this: management believes that many external factors such as supply chain issues, the high inflation rate in the US, COVID variants, and the elimination of US stimulus have impacted PayPal's active users growth and revenue growth. Management said this. With all that said, 2021 was also a difficult year. It was a particularly hard year to forecast. Exogenous factors also did impact our results. Supply chain issues disproportionately impacted our cross-border volumes and our small business merchants. Inflationary pressures impacted spending spending within certain segments of our user base. Rising threats from COVID variants cut travel and event bookings, and the elimination of government stimulus had an impact as well. E-commerce growth rates during the holiday season were lower than industry expectations despite a strong 2-year growth rate of almost 50%. The impact of Omicron and the effect of inflationary prices combined with lack of stimulus is having an impact on spending and by extension our business. This impact is most pronounced on our lower income cohorts and has continued into the first quarter. The persistence of inflationary effects on personal consumption, labor shortage, supply chain issues, and weaker consumer sentiment have led us to adopt a more cautious outlook. Here's the interesting thing part. PayPal's two biggest competitors, Visa and MasterCard, did very well during the same quarter ended on December 31st, 2021. For example, Visa's revenue grew 24% year over year, and MasterCard's revenue grew 27% year over year. In comparison, PayPal's revenue grew 13% year over year during the same period. This shows Visa and MasterCard's businesses are much more resilient and have much larger economic moats than PayPal. The second biggest headwind is this. PayPal's management suddenly abandoned its goal to achieve 750 million active users by 2025. Many investors are not happy about this sudden change. Also, management has changed its growth strategy to focus more on user engagement and less on new user acquisition. This means PayPal will invest much more on campaigns that will encourage existing users to use more PayPal services because the return on investment (ROI) is much higher on existing users, and invest less on incentive campaigns that would increase user growth because the return on investment (ROI) is much lower on new users. Management said this in the fourth quarter. In connection with the increased use of incentive campaigns throughout 2021, we identified 4.5 million accounts that we believe were illegitimately created. This number is immaterial to our overall base of 426 million customer accounts, but it affected our ability to achieve our guidance in the quarter. We're evolving our customer acquisition and engagement strategy, and we now expect to add 15 million to 20 million net new customer accounts this year. In addition, we no longer believe that the 750 million medium-term account aspiration we set last year is appropriate. In assessing our marketing effectiveness, our engagement initiatives were considerably more successful than the incentive campaigns. We successfully moved customers up the engagement continuum into higher levels of engagement throughout the year. These strategies had strong returns and over time will be important contributors to achieving our long-term revenue per user objectives. Moving forward, we will continue to grow our users, but our focus will be on sustainable growth and driving engagement. To be very clear, this is a choice on our part. We could increase our spend and accelerate our net new active trajectory. However, we believe there are better ways to achieve our financial results. We strongly believe that we are making the right decisions in redirecting our spend to our high-value customer acquisition and engagement channels. That said, over the next 12 months, as these less engaged customers naturally roll off, it will materially reduce our quarterly net adds. PayPal's management admitted that they made a mistake of focusing too much on incentive campaigns in order to attract new users last year. The problem was that these new users only joined PayPal because of the incentive campaigns. These new users tend to have high churn rates and low returns on investment. Many of them created fake accounts to take advantage of PayPal's incentives. This is why management reported that PayPal had 4.5 million illegitimate accounts in the last quarter. Management decided to focus on campaigns that would drive more user engagement and increase average revenue per user because the return on investment is much higher on existing users. In my opinion, I believe this is the right strategy going forward because PayPal already has a very large user base, 426 million active accounts at the time of making this video. The third biggest headwind is this. PayPal's total payment volume and revenue growth were greatly impacted by eBay in the past quarters because eBay had been transitioning from PayPal to its own managed payments platform to process transactions. Management said this. 2022 is going to be a year of transformation and investment as we transition from outsized growth driven by lockdowns during the pandemic and finalize the lapping of eBay's managed payments transition. eBay's transition will put an incremental 600 million of pressure on our top line. Approximately 400 million in Q1 and 200 million in Q2. In the second half of the year, I look forward to being able to stop adjusting for eBay and letting the strength of our core results speak for themselves. Our growth excluding eBay has consistently been above 20%, and our year-over-2-year growth rates have been remarkably stable, again demonstrating the underlying strength of our platform. Here's the important part you want to know. It explains PayPal's revenue growth going forward starting in 2022. According to management, eBay has already transitioned to its own managed payments in 2021. eBay should no longer have a large impact on PayPal's revenue growth going forward starting in the second half of 2022. For example, if you look at the most recent Q4 quarter here, you can see eBay contributed 3% of PayPal's total payment volume in Q4. eBay also contributed 3% of PayPal's total revenue in Q4. PayPal's total revenue grew 13% year over year in Q4, but if we exclude eBay's revenue, PayPal's revenue grew 22% year over year. If PayPal's management is correct, PayPal's revenue growth should return to normal at around 20% year over year growth, excluding eBay's impact, because eBay's payment volumes will be fully transitioned out of PayPal by the end of 2022. Management also gave this guidance for 2022. Revenue expected to grow 15% to 17% on a spot and foreign exchange basis. Excluding eBay, revenue expected to grow 19% to 21%. The fourth biggest headwind is obviously increasing competition. In my opinion, I believe PayPal's two biggest competitors are Visa and MasterCard in payment checkouts. For example, if you shop online a lot, you will notice that the most popular payment checkout options are Visa, MasterCard, PayPal, and American Express. Typically, when we shop things online, most people will choose to use either Visa, MasterCard, PayPal, American Express, or Discover in the US. Visa and MasterCard are the two biggest card payment brands. They are the two most popular payment card options for most customers. This is why their businesses did much better than PayPal in the most recent quarter ended on December 31st, 2021. PayPal is very popular in online payments, but it's not as popular as Visa and MasterCard in offline payments. For example, most people will use their Visa or MasterCard payment cards to pay for things in offline retail stores instead of using PayPal. I believe this is one of the biggest reasons Visa and MasterCard reported much better earnings than PayPal in the most recent quarter ended on December 31st, 2021. PayPal also competes with other digital wallets including Apple Pay, Google Pay, ShopPay, and Cash App. As of now, PayPal is still the most popular digital wallet compared with other competitors. Going forward, there will be a lot more competition in digital wallets because many companies such as Square's Cash App have introduced payment solutions, money transfer services, crypto trading and investing that compete with PayPal's super app. So is PayPal stock a value trap? Personally, I believe PayPal's headwinds I mentioned earlier are only temporary. I would not consider PayPal a value trap because PayPal's revenue growth should return to normal again once eBay's payment volume is fully transitioned out of PayPal by the second half of 2022. Management expects that PayPal's revenue growth excluding eBay will be between 19% and 21% year over year in 2022. Also, PayPal's new strategy to focus on campaigns that will increase user engagement should be much better and more profitable than incentive campaigns that will drive new user growth. The downside of PayPal's new strategy is that PayPal's user growth will likely slow down going forward. For example, management expects that PayPal will add 15 to 20 million net new active accounts in 2022. In comparison, PayPal added 48.9 million net new active accounts in 2021. I would consider PayPal a value trap if the company has declining active users and declining revenue every quarter. To be fair, we should not expect PayPal to have the same high user growth and high revenue growth rate as in 2020. At the time of making this video, PayPal has 426 million total active accounts, including 34 million merchants. In my opinion, I believe PayPal has a lot of leverage to invest in marketing campaigns that will increase existing users' usage of PayPal services. We will know whether this new strategy will work by the end of 2022. Another thing I should mention is that Amazon customers in the US will be able to check out using Venmo starting in 2022. PayPal owns Venmo. This new partnership with Amazon should increase PayPal's total payment volume going forward, but of course this is too early to tell now. As of now, I believe PayPal's super app is the most important product that should drive PayPal's long-term growth, especially user engagement and the new active accounts growth. PayPal is the most popular platform for sending money online, receiving money from other people, and paying things online because of how easy it is to use PayPal and because PayPal is accepted in more than 200 countries around the world. Other than sending money online and paying things online, PayPal is adding more services to its super app to drive user engagement and user growth. For example, you can use PayPal's Buy Now Pay Later service to split your purchase into 4 interest-free payments. You can buy, sell whole cryptocurrencies including Bitcoin, Bitcoin Cash, Ethereum, and Litecoin. You can buy things and check out with cryptos in your PayPal account. You can deposit checks, set up direct deposits, and pay your bills using PayPal. Management said this, and our super app is showing extraordinarily promising early results. Now, we only rolled that out fully in the middle of October across all of iOS and Android, so we're 3 or 4 months into it. But what are we seeing? We're seeing double the average revenue per active account when somebody uses our app versus just checkout. When somebody uses the app, the propensity to churn is 25% less. In the near future, we have talked about adding savings as well as adding investing to our platform. And I think those fit very closely with our core business and how people think about us being a digital wallet. Others are doing this, and it's certainly a path that we want to go down. So we'll continue in each year to add additional products and services that will complement what we offer today. Let's talk about PayPal stock valuation. I always use this intrinsic value calculator here to estimate a company's fair intrinsic value. If you want this intrinsic value calculator, you can download it in my Patreon blog in the video description. Here are the key assumptions. First, I define PayPal's intrinsic value as its future cash flows discounted to the present day. The discount rate is 10%. This is slightly higher than the 8.5% cost of equity calculated by Finbox.com. If you want to be more conservative, you can always use a higher discount rate here. PayPal's most recent 12 months of free cash flow is $5.43 billion. Based on the major headwinds and the long-term prospects I talked about earlier, I believe PayPal's free cash flow will grow at a compound annual growth rate CAGR between 10% and 20% over the next 5 years. This cash flow CAGR is very subjective. You can always use a low cash flow CAGR here if you want to be more conservative. To calculate the terminal value at the end of year 5, we're using both the perpetual growth model and the exit multiple here. Then we take the average of both models to calculate the terminal value. Let's go over these 3 case scenarios: the worst case, the normal case, and the best case scenarios. Under the worst case scenario, we're using a compound annual growth rate CAGR of 10%. If we forecast PayPal's free cash flow to the next 5 years and discount the free cash flow to the present day, PayPal's intrinsic value should be around $136 billion for the entire company, or $116 per share. I'm giving this scenario a 25% probability here. Under the normal case scenario, we're using a compound annual growth rate CAGR of 15%. If we forecast PayPal's free cash flow to the next 5 years and discount the free cash flow to the present day, PayPal's intrinsic value should be around $167 billion for the entire company, or $143 per share. I'm giving this scenario a 50% probability here. Under the best case scenario, we're using a compound annual growth rate CAGR of 20%. If we forecast PayPal's free cash flow to the next 5 years and discount the free cash flow to the present day, PayPal's intrinsic value should be around $203 billion for the entire company, or $174 per share. I'm giving this scenario a 25% probability here. If we add all these numbers here, PayPal's fair intrinsic value should be around $144 per share at the time of making this video. This means I believe PayPal is undervalued at the time of making this video. In comparison, Morningstar gave a fair valuation of $151 per share. So will I buy PayPal stock? Yes, I will likely buy more PayPal stock going forward in the upcoming months because I believe the major headwinds I talked about earlier are only temporary. I believe management's new strategy to focus on user engagement will help PayPal return to high revenue growth again in the second half of 2022 after eBay's payment volume fully transitions out of PayPal. Realistically, I do not expect PayPal to have the same high user growth and high revenue growth as before. I've had PayPal stock in my portfolio for several years already. My plan is to continue investing in PayPal for at least 10 years, as long as PayPal continues to have outstanding products and services. Based on my estimate, I believe PayPal's fair interest value is around $144 per share. I will update PayPal's fair interest value estimate every quarter once it releases its earnings. If you want the latest interest value estimate for PayPal, you can download it in my Patreon blog in the video description. Now, all these estimates are only my opinions and my analysis based on my research. They are not financial advice. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting the channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.